Hey everyone, this is Zach. So today I want to cover 101 real estate terms you need to know as a real estate agent. So it's actually a couple terms more than 101. I just lost count, but these are things that you should know either as a brand new agent, an experienced agent, or you just need a refresher. So I'm going to cover kind of some broad topics of each term. I'm not going to dive in and define every single term to the fullest that it can be covered. These are just broad strokes. That way you understand what's going on as a real estate agent and we can help more people. So let's quickly go through these. 1099. So you see this a lot. Everybody is an independent contractor as a real estate agent. Yes, every now and then there's employee-based companies. I think Redfin, you might be an employee in some situations, but majority of the time as a real estate agent, you are a 1099 independent contractor working for a brokerage. Addendum. So this is when you are adding terms to the initial offer of when you're sending this over. Affiliate broker. So in Tennessee, a real estate agent is also deemed an affiliate broker, different than a principal broker or managing broker. This is an affiliate broker. Alta, this is a closing statement. You also see HUD-1. This appears from title companies. It breaks down all the numbers that how much the seller's going to make when they close their house, how much the buyer's going to have to pay in different expenses. So this Alta statement breaks all that down. Amendment. So amend means to change. So you will use amendments when you are under contract and you want to change something about the initial agreement that's been made. For example, you want to extend the closing date even further in the future. We use an amendment. We are amending the terms of the original offer. Appraisal. So again, this is if your client as a buyer is getting a loan, almost every single lender out there is going to want to have an appraisal done on the home. This makes sure that the money they are loaning out is worth it. The home has to be worth it. ARM, this is an adjustable rate mortgage. So sometimes you'll see like a 5-1 ARM. So this could be a situation where maybe the interest rate on the mortgage, on the loan that's issued out to the buyer stays the same for the first 5 years, but then after that, it adjusts. So that's that adjustable rate mortgage. And oftentimes you can have like first 5 years is fixed. After that, it adjusts and it's a 30-year note. So that's an ARM. As is, you'll see this tip a lot in the Florida market. Occasionally here in Tennessee, as is means or implies I will buy this house without asking for any sort of repairs or anything like that. I'm buying it as is. Now, oftentimes, sometimes you see that, but people still negotiate things while under contract. Assessed value. When I wrote this out, is meaning more the tax assessor's office. They issue out an assessed value that they tax every property on. This is different than the market value that an appraiser would issue out. So this is what the county taxes the home based on. Back on market, this is if a deal was pending, it's under contract, and it goes back on the market. So maybe something popped up during the inspection and that previous buyer backed out, or maybe the home didn't appraise, or maybe the buyer couldn't get financing. So the home is back on the market. Backup offer. This is, just as it implies, the seller has already agreed to an offer with a current buyer, and you want to write a backup offer in case that first one falls out and it goes back on the market. Instead of going back on the market, it would just go straight to you as a backup offer if it's accepted. Broker. So I was implying that affiliate broker is kind of the, lack of better terms, entry tier for getting your real estate license. And then after 3 years in the state of Tennessee, you can apply to be a broker license. So that's one step up. Brokerage. So that is the company that you choose to hang your real estate license with. Now in the state of Tennessee, as an affiliate broker, you have to hang your license under a brokerage. Basically, they're going to help monitor your transactions, make sure you're legally compliant with different stuff, train you up. So that's the brokerage. Buyer's agent, you represent the buyer. A CDA. So for us, this is a commission disbursement authorization form. Our agents send this out to title. That way they get paid whenever title disperses funds. The last one, my Zoom thing is in the way. Let me move that real quick. Closing. So closing is just where sellers and buyers have shown up. They've signed off all the final documents at the title company or with an attorney to agree to transfer the ownership of the property. And this is closing. Doesn't have to be at the same exact time. Doesn't have to be at the same exact location. Sometimes the seller can sign early, the buyer can sign later, but closing has happened. Next terms, closing costs. So on the buy side, this implies maybe different lending fees, title search fees, taxes, prorated. There could be a lot of different things that add up to the closing costs for the buyer or closing costs for the seller, property taxes, maybe mortgage, paying that off. So closing costs. Closing statement, again, kind of referencing back to the Alta, or it's also a HUD-1 statement. That's the closing statement. Commission. So this is how majority of real estate agents get paid. We are not W-2 employees. We are 1099 contractors. So when a deal closes, we make a commission. CC and Rs, so that is short for covenants, conditions, and restrictions. These are rules established by HOA communities, and they write them out in covenants, conditions, and restrictions of that community, CC and Rs. CCRs for short. A CMA, a comparative market analysis. So this is a real estate agent's way to help share market conditions to a consumer. So that way, for example, a seller could choose a good listing price. It shows different comparables. That's the next one. Comps. Comparables for short is comps, but comps will be on that CMA. So if there's other 3-bedroom homes, other 2-bath homes, other homes that have a pool, basically we want to get as close as possible to the subject property, and that goes on a CMA. Those comps go on the CMA. Spelled contingency or contingency. That is, let's say we have a contract, a contingent offer means I will pay this price contingent upon meeting this requirement. So you could see inspection contingency, financing contingency, appraisal contingency, contingent upon the sale of the buyer's home. Maybe they have to sell another home first, then they will close on this one. So that's what contingencies are. Cooperating commission. So you will see this a lot on the MLS. If you are a buyer's agent, it oftentimes shows that as a cooperating agent, you will make a certain commission. So you'll see 2.5%, 3%, a flat rate, 2%, 1%. That's where it's negotiable. But that's what's being offered to the other agent. Days on the market. So as soon as a property is listed online, that starts a clock that it's on the market. So you can have 20 days on the market. That means it's been on the market for 20 days. D, this is what shows who owns the property. Disclosure. So this allows the seller to disclose, hey, do I know, is there a sinkhole? Is there plumbing leaks? Is there something I need to disclose to the other side? Or you could even have like a lead-based paint disclosure if the home is built before 1978. So there's different disclosures that could be made. Down payment for a buyer. Let's say the house purchase price, we're just using very easy numbers, $100,000 purchase price. I can do a down payment of $20,000. That means I need a loan, 80% value. So my down payment is $20,000. Due diligence, or also kind of the same thing as could be inspections, could be you're trying to figure out zoning requirements, but a due diligence is a period in which a buyer researches everything they need to and satisfies any contingencies they put in that offer, but it's basically doing your homework, is due diligence. EMD, earnest money deposit. This is a good faith deposit, and we don't hold earnest money. Usually a title company or attorney, a neutral third party, will hold the buyer's earnest money deposit, and this goes towards the buyer's down payment closing costs. So let's say we write an offer for $100,000, and upfront we have $2,000 earnest money deposit. This is showing I'm serious about moving forward. Easement. This is a right-of-way that allows somebody else to use a portion of a property. So for example, you could have maybe somebody else's driveway goes through a piece of land to get to their house. So that's an easement. Or utility companies. If you see like different power lines or whatever else, they put an easement on the property that they're allowed to use that to run telephone wires or whatever else they need to. Next, escrow. So escrow, it's very rare you'll hear it. I've heard it on TV recently, but hey, we're in escrow. That just means we're under contract. FHA loan. So this is a different type of loan product. You will see a lot of first-time home buyers could utilize this loan. And the reason being is sometimes you can have a lower credit score, and you could also have to only put down 3.5%. So it's a little bit more flexible for people. FHA loan. Fixture. Now, a fixture of a property, this goes back to pre-licensing courses, but it's, if you think about it, not going deep into the definition, but basically think of a fixture as anything that's permanently attached to the house. Now, it could be a couple other little things, but think of permanently attached, like kitchen cabinets, for example, or the countertops. When you sell a home, 99% of the time, the sellers shouldn't or won't take kitchen cabinets and counters. So another example, it doesn't apply for everything, but if you took the house and imagined you flipped it upside down and shook it, what would stay put? That's normally a fixture. Flood insurance. So sometimes homes are in a flood zone, means they're more prone to flooding. So you might need flood insurance. So I would double check different flood maps or FEMA maps if the house is in a flood zone or if you need flood insurance. FSBO. This is a for sale by owner. This means a seller chose currently to not list with a real estate agent. They're trying to sell their house on their own. You can see these on Zillow or different for sale by owner websites, but that's a FSBO. HOA. Homeowners Association. You'll see these a lot in neighborhoods. It's kind of a governing body that sets rules for the community. The intent with a lot of the HOA communities is to establish same set of rules and guidelines to help protect the property values of the homes in that neighborhood and help everybody appreciate steadily because they're all uniform. Home inspection. So buyers, I always recommend, even if you're buying a home as is, always get a home inspection. This is a licensed person coming out to fully inspect the home to check if there's any leaks, how good the roof is, the AC, the water heater, but that's a home inspection. HUD, Housing and Urban Development. You will hear this every now and then, also like the HUD 1 statement or different things with HUD, but that's what that is. It's a federal agency. Legal description. So this is established by the local municipalities, but it's a key set legal description. It's a description of the property that makes it unique and one of a kind. So what describes it? That's what that local municipality establishes, is a legal description of the home. Listing agreement. This allows a listing agent to put a sale or a for sale sign in the yard, list it on the market. That's a listing agreement. It's an agreement between the listing agent and the sellers to list their property. And that's the next one, listing agent. They're the people that are listing the home for sale, a listing agent. Listing appointment. This is what the agent, before they have that signed listing agreement, they go on an appointment to meet with a prospective seller to see if it would be a good fit to work together. That's a listing appointment. Hey, let's meet up. Let's go over what your home could sell for, what we can do to help get it sold, and how we can best help you. That's a listing appointment. Lien. So this could be something that the seller still owes on the home. So if somebody put a lien on the property, so whenever that house goes to sell, that lien has to be paid off. Could be a mechanical lien. Maybe they didn't pay a roofer that did a roof 5 years ago and they never got paid. Well, that roofer put a lien on the home and that's going to have to be paid off as soon as that property sells. Loan to value. So this is a little bit more into the mortgage side, but sometimes you'll hear LTV, which is short for loan to value. So this means home is worth $100,000. They're taking out a mortgage of $80,000. So that's an 80% LTV, loan to value ratio. Lockbox. This is what allows other agents, if you are the listing agent, you are listing a home for sale, you put a lockbox on the property that'll have like a front door key in it. That way other agents, when approved, they can come over, use the lockbox, get the key out, and then unlock the door and walk through the home for a showing. MLS, multiple listing service. So most real estate agents are part of an MLS system. So across Middle Tennessee, there's RealTrax. West Tennessee, there's Paragon. East Tennessee, there's Flex, Navica. So there's a whole lot of different MLS systems. Majority of the time, when you list a property on the MLS, it will syndicate across all the public-facing consumer websites like Zillow, Realtor.com, Trulia, most of the time. And also the MLS shows a cooperating compensation. Hey, I will pay a buyer's agent this much money if you bring a buyer to my listing. MLS. Mortgage. So that is a loan. I can't pay all cash for this property, so I need a mortgage. I need a bank or a lender to give me money to cover the difference of my down payment. NAR, that is the National Association of Realtors. They are the biggest governing body and they oversee realtors. Off market, that just means instead of being listed on the MLS, on Zillow or consumer facing site, it doesn't show up online. It's off market. Or it's not even listed for sale. It's off market. Maybe you just approach a homeowner out of the blue and see if they want to sell. Off market. Pending. This just means a seller has accepted an offer and they're working with a buyer towards a closing date. So the home is now pending. It's under contract. PITI, principal, interest, taxes, insurance. It's how you calculate your monthly payment of how much this house is going to cost. Pre-approval. So I put these two together, pre-approval, pre-qualification. Let me start first with pre-qualification. That's that entry level. That means a buyer called into a lender. They said, hey, I make $100,000 a year. Do I qualify for this house? The lender will say, yes, based on that much money. Here's a pre-qualification letter based on what you told me. A pre-approval is the next step. Hey, the lender has actually reviewed documentation. They've seen the W-2s. They've seen how much this buyer makes. They've seen bank statements. They've issued a pre-approval. That's the next step up. PMI, private mortgage insurance. So this is, let's say we are using a conventional loan and we don't put down 20% or more. I only put down 5% on conventional loan. Well, you're going to have to pay PMI. So now you have your PITI from earlier plus your PMI. Realtor. So this is a different designation than a real estate agent. A realtor means a real estate agent has joined NAR, the National Association of Realtors, plus a local association, deeming them a realtor. Realtors have to apply by an additional code of ethics and higher standards. So that's a realtor designation. A rider. So this could be like a sign rider, for example. You'll see, you'll have your normal for sale sign, and then sometimes at the bottom you have a little teeny sign that says like, beautiful inside, pool home, new listing. So those are little sign riders. That's what that is. Showings. This is when you will help a buyer walk through a home and see if they want to make an offer on this house. So it's a showing. You schedule showings for the weekend, see multiple homes. Showings. Special assessment. You see these a lot with like condo communities, for example, or homes that are connected, like a townhome community. Let's say the special assessment in a condo community, they want to replace the roof over all the condos, the big roof. Well, they will issue a special assessment to help cover the cost of the roof. So each owner will have to pay a lump sum amount. It's a special assessment. THDA, that's the Tennessee Housing Development Agency. It is geared towards first-time homebuyers. Doesn't have to be first-time homebuyers, but it's geared mainly towards them to help with down payment assistance, and it's a special loan program. Title. So it could be a title company. This helps transfer the property from the seller to the buyer on the day of closing. Or in other states, it's an attorney, but here in Tennessee, a lot of people use a title company. So that's title. Or to say the seller has title to the property, that means they own it. Transaction. So if I say I've done 20 transactions this year, that means I've done 20 sides, or I've helped 20 people close on a home. So that's transactions. Under contract, again, same thing as pending. The seller has agreed to an offer and signed off with a buyer, and they're moving forward towards a closing date. Underwriter. This is somebody that works with that mortgage lender, that banker, they send all your information. What the lender sends all the buyer's information to the underwriter. It's basically like a second set of eyes. They're higher up. They make sure that everything that they've been told, everything that they've seen is officially a fact, and they can issue the loan to the buyer. That's the underwriter. USDA, United States Department of Agriculture. Again, this is another loan product in Tennessee. It's for more rural properties because it can be 100% loan. So something definitely to check out, USDA. VA, another type of loan program for veterans. Again, it could be 100% loan program. So that way it helps people so they don't have to come up with this large down payment, but it helps veterans. Section 8, you might hear this with rentals. Renters call in and say, is this home Section 8 approved? So this is a local municipality. They're all across, they're everywhere, nationwide, but Section 8 housing you might hear. But this Section 8 programs will help a tenant that maybe they're it's hard financial times right now. They've applied to this for this program, and Section 8 will help cover a portion of all of that person's rent. So it's meant for kind of lower income individuals. Super lockbox. This is a type of lockbox. I kind of deem the next two realtor lockboxes, but a super lockbox is one version of that. They can be unlocked via Bluetooth. They are optional. Realtor lockboxes are optional, so you could use a combo lockbox as well. But Super is one, Sentry Lock is another. Supras usually are blue lock boxes. Sentry Locks are kind of, they have the keypad on the front. That's the way to remember what a Sentry Lock is. And Sentry Lock, people that have that can issue out free one-day codes to other agents, or maybe an inspector needs to come by. Sentry Lock. Association. This is talking about your realtor association. So there is a local board, there's a state board, and there's the National Association of Realtor. So association. Dues. This is again applying to the above association. Every single year, realtors have to pay their dues. I know locally it's about $550 annually to be part of a realtor association that covers your local, state, and national dues. TREC, GREC, FREC. No, I'm not making up words, but the Tennessee Real Estate Commission, the Georgia Real Estate Commission, the Florida Real Estate Commission. This is the state licensing board. This is the law. These are the people that issue the license themselves. So they allow you to become a real estate agent. They are like, hey, they set the standard, they create the laws. TREC, GREC, FREC. Tax records. So a lot of times as a real estate agent, you will start diving into public tax records. I know we use CRS tax data, but tax records. Commission splits. Sometimes agents have to pay a split to the brokerage that they hang their license. Could be 70-30, you'll hear, or 80-20. What does that mean? That means every single deal you close, you keep 70%, and you give away 30% to the brokerage. Hopefully they're giving you enough to validate that, but that's a commission split. Gross versus net. So these are two things to definitely understand. You could see, for example, gross is basically everything that's come in. Net is minus everything that's left. So you could see, let's keep it with companies. Maybe they say, hey, we've added 200 agents, but that's the gross. The net, they've lost 150, they're only positive 50. Or rentals. We gross $2,000 a month on this rental property, but with all the expenses and accounting for vacancy and property management, we only net $500 a month. So that's the net difference of gross versus net. PSA, that's short for purchase and sale agreement. This is the main contract that everybody has signed off on, the seller and the buyer, the PSA. Disbursement. So this is when the title company decides to release the funds. The seller's set to make $50,000 on closing day. Title has all the paperwork. They are ready to disperse that $50,000 to the seller. Code of ethics. This is what realtors have to follow. It's that additional set of, hey, you have to follow the state licensing boards, but the code of ethics is an additional standard that realtors place on themselves to kind of raise the bar to being a real estate agent. That's the code of ethics. And you have to complete a course every couple of years to be compliant with the code of ethics and make sure you're fresh on them. CE or CE credits classes. This is continuing education. So in order to renew your license with TREC, you have to complete so many CE credits every 2 years. Currently, it's 16 hours. So that's CE. Combo. This implies a combo lockbox. So if you're going for a showing and it says combo, you want to make sure you get that. Usually it's a 4-digit number, or sometimes they have letters on them, but a combo lockbox. That's different than the realtor lockboxes. Septic tank. So that's what a septic system is. That means it's not connected to a sewer system. There is a basically giant tank in the yard that collects all the sewage every time you flush the toilet. Step system is a little bit bigger. So if you have an individual septic tank for one house, a step system is basically a gigantic septic tank for an entire neighborhood. And then eventually that step system will grind everything down, process it, and send it off to the sewer. But that's a step system. Think basically septic for the entire neighborhood. CD or closing disclosure. So lenders will issue this out. That way the buyer knows exactly everything they're being charged for and how much money they have to bring to closing. Wire fraud. So you hear this a lot. Basically, this is a warning to buyers or even sellers for one-off chance, but mostly buyers. Hey, do not wire money where you're not supposed to. Always confirm wiring instructions, especially to title companies. Realtors will never ask you to wire them money. So usually there's a wire fraud disclosure statement that explains all this. SQFT or square footage. You'll hear this a lot. So homes that are 1,500 square feet, that's how big the house is. Price per square foot. You'll hear this a lot, or with different metrics or on the news that they say, hey, Nashville is past $200 a square foot on average. So it's just calculating price point per square foot. Selling agent. So this kind of gets confusing sometimes. The selling agent is also the buyer's agent. Leads. So as a real estate agent, 1099 contractor, small business owner, you have to bring in leads for your business in order to have closings. So this could be your family, this could be friends, this could be for sale by owners, this could be expireds, this could be off-market properties you're reaching out to see if they want to sell. But those are leads. And the process of everything I just described is lead generation. It's reaching out to new people, getting their contact information, and following up. That's lead generation. A final walkthrough. So these are really good for buyers. And usually it could be the day of closing, maybe the morning before they go in to sign at title. It could be the day before, it could be a week before, but it's basically to confirm that the property is in the same condition or better than when they first went under contract. Mutual release or termination. So this is, unfortunately, we have to cancel the deal. All parties sign off on a mutual release and cancellation form. That way there is no down the road, somebody says, well, I never agreed to terminate that deal. It's mutually released. Everybody's agreeing to terminate the contract that we're under contract with and move along and go their separate ways. Cap. So as a real estate agent, some companies have a cap. What that means is, going back to the 80-20 example, I keep 80% of everything I bring into the company keeps 20%. Well, some companies, when you hit a cap of $10,000, you now don't have to pay 20% every single time to the company anymore. There's an annual cap. That's what that means. Self-employed. Again, as a real estate agent, 9 times out of 10, you are going to be a self-employed 1099 independent contractor. You basically are your own small business. You just work under the umbrella of the brokerage that you hung your license with. Wholesaler. This is it could be a real estate agent, but sometimes they don't have a license, but it is somebody that gets a property under contract and they sell that contract to an end buyer for a fee. Basically, lack of better terms, think of middleman. A terrible term, but it's a wholesaler. Rental. So this could be a rental property. That's what was meant by this. A rental property is one that somebody has bought. They don't live there, but they rent it out to a tenant and it pays them monthly to live there. That's a rental property. Cash flow. So remember back to gross minus net. So that's going into a rental property is if I bring in $2,000 a month, I have $1,500 in expenses, maybe between the mortgage, set aside for vacancy, CapEx, all those different stuff, and you have $500 left. That's your cash flow every single month. Investment property. Again, this is buying the rental in itself. Investment property is different than a primary residence most of the time. Investment property will have different set of lending standards as well. Sometimes it requires a higher credit score. Sometimes it requires a higher down payment. Appreciation. So historically, homes appreciate over the long term. So for example, if I bought a home for $100,000, the market in general has appreciated 5%. In that year, that means home values have gone up 5%. That means the following year, my home is now worth $105,000. That's appreciation. So historically, that's why real estate is such a great investment, because over the long term, it continues to go up. Multifamily. So multifamily properties are more than one. So think of duplex, triplex, quadruplex, even think of apartment buildings. They're multifamily. 1031. This is a unique strategy used by savvy investors that maybe they are trading up. So for example, they could be selling that duplex. They're not going to touch the proceeds. You're going to have to consult with a lot of people. This is just broad strokes of what this means. But a 1031 exchange, I'm selling my duplex and I'm rolling those funds over into a quadruplex. That's a 1031 exchange. And it can help because if you do it right and consult the right people, you could defer a lot of your taxes because you're just rolling it to the next property. You're not actually touching the money. Adjustments. This is what appraisers do when they run their appraisal report. They make adjustments on comps, similar properties, up or down, and align it to see what the subject property should be worth. They make adjustments on the other properties. Inspection report. So this is once you've hired out the inspector, they issue their report. It's a list. It's really long. Sometimes they're 20, 30, 40 pages long of little items here or there, or big items that are wrong with the property. This is an inspection report. WDO, wood destroying organism. So a lot of times you will see maybe we need a WDO report, or we need to have somebody come out and do a WDO inspection. So this is beyond just termites, wood destroying organisms. Could be different fungal stuff, but it's anything that could affect the property for wood destroying organisms. That's what they look for. Volume. So real estate agents claiming I've sold 10 million in volume. That means they've sold $10 million worth of homes based on the purchase prices. So let's say I've sold $1 million in volume this month and I've had 2 sales. That means each home sold at $500,000. Negotiation. This is the concept prior to accepting an offer that the seller and buyer go back and forth to agree on terms. They are negotiating. That's the negotiation phase. Default. This means somebody has not been paying their mortgage and they are now default to the lending company, to the mortgage. They're in default. Equity. So let's say I buy a home for $100,000. I put 20% down and I took out a loan of $80,000. My equity in the property is the difference, $20,000. Now, if the home appreciates earlier, 5% to the next year, and it's now worth $105,000, let's forget loan paydowns for a second. That means my equity is now $25,000 equity. That's the difference between what the property is selling for and what you actually owe on it, your equity. Vendors. This implies, as a real estate agent, maybe I have a vendor list, people I like to work with. It could be title companies, lenders, inspectors. Those are vendors. Dual agent. So this is when a real estate agent, it's not allowed in every single state. It is allowed in Tennessee. A dual agent is where the one agent represents both the seller and the buyer. But it gets tricky because dual agency, you're supposed to represent both parties and to their interests, but you know the seller wants to sell for the most amount of money and the buyer wants to buy the home for the least amount of money. So that's where it gets very tricky, and that's why some states have outlawed dual agency. Foreclosure. This means the initial homeowner has not been paying their mortgage and the company, the lending company has taken over the property. They foreclosed on the home. Refinance. The seller, maybe they have a lot of equity. Maybe their house is worth $100,000. They only owe $50,000. Maybe times are tough, or maybe they want to do a bathroom remodel. Maybe they need to pull some money out of their equity. They have $50,000 in equity. Maybe they refinance up to $80,000. So they get $30,000 as a cash out. Yes, it's still a loan, but they get $30,000 up front that they can do what they want with it. That's a refinance. Commercial properties. This is either multifamily properties of 5 units or more, or you'll see like your restaurants or your industrial buildings or the big building behind me. Those are commercial properties. Tenants. These are also renters. But tenants could be like the people that work at the restaurant. Maybe they don't own the building, but they're paying a monthly rent to the landlord. That's the next one, who actually owns the building. So those are tenants. REO property, that is a bank-owned property. Again, in a foreclosure situation, they've taken over. It's now a real estate-owned property. It's a bank-owned property. So those are different terms. I'm going to go get a glass of water because that's a lot of them. If you have any questions, comment down below, or if you think I missed something important, comment down below. But these are 101 plus real estate terms you should know as a real estate agent. Until next time, I'll see you guys later.